Let's say you have a pile of money you're sitting on and you want to invest it. If you decide to invest it in stocks, then it's incredibly easy to track the value of your investment on a minute by minute basis. But what if you want to invest in a less regulated asset class like, say, baseball cards or art? How do you even begin to assess the price of these assets, both before and after you've purchased them? You'd probably turn to a guy like Stefan von Imhoff. For the past few years, he and a co founder have been running a newsletter focused on alternative investments. Its weekly installments go deep on various investment categories, ranging from limited edition books to water rights, and it now reaches over 85,000 subscribers. The newsletter is not only monetized through the traditional models, but it also launched a fund for accredited investors, and Stefan's team has deployed millions of dollars across several asset classes. In my interview with Stefan, we talked about how he got interested in alternative investments, the steps to launching a fund, and his strategy for acquiring other newsletters. Hello, I'm Simon Owens, and this is The Business of Content, the show about how publishers create, distribute, and monetize their digital content. If you want to listen to an audio version of this show, subscribe to The Business of Content wherever you get your podcasts. Okay, let's jump into my interview with Stefan. Hey, Stefan, thanks for joining me.
Hey, great to be here. Thank you.
So, you run a newsletter that is dedicated to buying what are called alternative assets. Let's start with some definitions because I don't know that my audience, everybody knows what that is. Can you start by explaining what alternative assets are?
Funny thing about alternatives is you ask 10 different people, you get 10 different answers, but our MO is pretty simple. If it's not a stock or a bond, we care about it, right? So we're looking at the more esoteric, exotic assets that are out there in the world, stuff like collectibles or alternative real estate, farmland, music rights, everything from graded vinyl and video games to toys, all sorts of offbeat alternative investments that, thanks to a number of factors, are prevalent in the world today. So that's kind of our beat.
Yeah, so like you think of it as, one of the categories would be any kind of collectible, whether it's art all the way down to rare baseball cards or something like that.
That's right. Yeah, artwork, baseball cards, sports memorabilia is big, wine, etc. That sort of stuff.
Yeah, it's things you think of like as rich people buying in a lot of senses, but I think what you're going to kind of get into is it's a lot of this stuff might be more affordable than some might realize. They just need to know the proper research to know whether the asset has any kind of actual long-term value.
And that's exactly what we do. It's like, we're living in this world now where everything's kind of investable, and that's exciting. We can go out and we can, invest in, a copy of the Constitution or a dinosaur skeleton or, a case of champagne or tequila. But how do you know if it's a good deal, right? Like, how do you know if it's something that's actually worth investing in? Just because it's cool doesn't mean it's a good investment. So that's what we do. We analyze these offerings, we analyze these markets. Fundamentally, what we do is understanding these markets, and all of these markets, alternative markets, are different. And so, we basically just we look at these markets and we attempt to understand them really for ourselves, but then we bring everyone along for the ride, and that's kind of how we roll.
And is this kind of are these markets like heating up, and if so, what why?
A lot of them are, yeah. There's a couple of factors why. The first is, I'm sure you've heard this a million times from a million other people, but COVID changed a lot of things. Um, Alternative investing certainly has benefited from COVID and the post-COVID boom. I think nostalgia is playing a big factor in a lot of this stuff, right? As kind of like Gen Xers, are getting older, and like elder millennials are getting older and wealthier. A lot of it, we harken back to the stuff that was valuable, back in our days. Sneakers, video games, that kind of thing. I think that plays into it. I think zero interest rates for a long time certainly played into things, but I think a lot of it's actually just due to regulation and technology. So about 6 or 7 years ago, there was a big regulatory change in the U.S., something called Regulation A. And what Regulation A, or Reg A as it's known, states is that basically it makes it a lot easier for companies to securitize assets. So this is when you started seeing a lot of like the real estate fractionalization start to happen. And then that fractionalization now has taken on a whole new life of its own, where now you have farmland that's being fractionalized, you have music rights, you have collectibles galore that are being fractionalized by a litany of different platforms. And so we're kind of, this is kind of part of the, we're catching kind of the the convergence of a bunch of different tailwinds. And I think that the fractionalization is, a key part of all of this.
Yeah, if I understand it correctly, what it means is like you can buy a stake in something that traditionally only one person or company would own before, like a piece of art. Let's say a piece of art was $1 million. You could put in $10,000 and own 1% or whatever that comes out to of that piece of art. So if it gets sold at a later date for $2 million, you get twice your investment basically. And also it seems like they're just like, I don't know if this is a result of that regulation, but there seems to just be more and more marketplace technology like platforms that are launching.
Yeah, that's it. I think it all kind of plays in itself, right? So, to your point about art, before, prior to all this, if you wanted to invest in, a Basquiat or a Picasso, how would a normal person go about doing that? Like, basically impossible. There's no access and there's not enough capital, right? But yeah, when you can buy 1%, for 15, $20,000 of a piece, you can ride that appreciation wave just like any other investor. And since so many people are doing this, it's affecting the markets themselves. So the markets themselves are getting juiced. Now, to be clear, alternative markets are not immune from the 2022 crash. But at the same time, they're not all in lockstep and in tandem with equities. And so I think that's what's most interesting about alternatives right now is that, they're just, many of them are decoupled from what's happening in every other market. And that diversification, is a big reason to invest in alternatives in the first place.
And you started getting, when did you start getting like interested in these kinds of assets? I know prior to doing your current thing, you were working for like a platform that specialized in acquiring websites. Was that kind of when you started getting like thinking about valuations and the worth and value of stuff, or did it come before then?
Yeah, that's exactly right. So I was working at a company called Flippa.com, and Flippa is basically a marketplace for buying and selling websites and micro private equity deals. And I'd started Flippa's due diligence program, and part of that program was, analyzing the true value of a lot of these kind of esoteric, exotic alternative investments, these websites. And so I kind of came up with a framework for evaluating and understanding the true value of these assets, and I started writing about it. And I started on Substack, got a pretty good following on Substack, and it wasn't too long after that I started to realize that this idea of understanding how to value esoteric assets could be expanded far beyond websites. To this day, website investing is one of my absolute favorite alternative investments, but there's a whole world, like we just talked about, of others out there. And so kind of expanded the scope of the newsletter into, all different areas. And then end up kind of joining forces with another gentleman who had a similar newsletter, which I think maybe we can talk about in a sec. But yeah, it's basically how we got started.
Yeah, so you get really interested in buying websites, and during the pandemic shutdown, you have some extra time on your hands since you can't go outside. You launch on Substack. At first, it was just about buying and selling websites to begin with. Like that's what you were writing about for the Substack.
Yeah, the Substack started writing about buying and selling websites and digital assets. So domains, domain names, e-commerce companies, that sort of thing. In a previous life, I had an e-commerce company, and always been interested in that idea of buying and selling. A lot of people don't realize you can buy and sell websites like anything else, right? It's kind of the drumbeat's gotten pretty loud on it at this point. By now, it has, but even a few years ago, that really wasn't the case. So I wanted to help tell that story, and the fact that I was working at Flip at the time really kind of helped with all of that.
So how I know we're going to talk in a second about you finding your business partner, your now business partner. How did the when you were just by yourself, was that did it start building up a readership then, like when you were writing solo, or when did you starting to see people being interested in your writing?
Issue one, no kidding.
Really?
They talk about like product, yeah, they talk about like product market fit, and there's all these metrics for have you achieved product market fit, and what it comes down to is you just know, right? You know what it looks like, you know what it feels like. I feel the same way about newsletters. I really feel that you can have a newsletter market fit, and it's that same feeling. And I was in product for a long time. I was the head of product at Flip at the time, and so I know what product market fit feels like, and that's what it felt like with the newsletter from literally issue number one.
Where were people coming
I
from?
mean, obviously, Just personal connections from the industry, friends. But I think my first issue went out to like 58 people or 100 people. It was definitely like less than 100, 100 or so people, and but even from that first issue, like, I basically laid out the thesis for what I wanted the newsletter to be about, and yeah, I got like 4 or 5 responses to the first issue, and it never really stopped. I mean, the feedback has, to this day still comes in. Every issue we publish, we get great feedback on, and some people that complain about this and that, and that's totally fine. But we knew I knew I was onto something basically from the very first issue, and that's it's a good feeling.
Yeah, and if you look at it today, it's like each issue is about a different alternative asset that you can invest in. It's a very deep dive. It has chapters. It's like thousands of words long. Was that the format? Was that the format you had right from the very beginning?
Yeah, I mean, from the beginning, it's been long reads. I'll just say that Gmail clipping is the bane of my existence. That's all I'll say about that. But yeah, I mean, our whole thing is we do one topic at a time, and we really, seek to analyze it. And we don't start with like an agenda, right? It's not like we're going to talk about this and we know where we're going to end up and land. I mean, we'll look at some markets and we'll start at point A and end up at point B or point C, and that's fine. That's part of the journey. It's like, these markets, a lot of these markets are so esoteric and just so rarely discussed and talked about that, part of the fun is just seeing what it's all about and, digesting that and synthesizing that for our audience. And, that's what we do.
So let's say you had like an issue about baseball cards. What would your tell me about like your process? Like what would in this long piece? What are all the different kinds of information that you would try to convey to a reader? I'm guessing it had a format that you stuck with in terms of how to evaluate the baseball cards, how to price them, all that kind of stuff. Like what was the approach?
We basically start with the history. That's the first thing. So every single market we look at, it's about where, how did we get to this point? Like, what does the history look like? Because I think that's really important for understanding a lot of these markets. And then part two is kind of like, okay, what's the current state of the market? That's usually the biggest section, so it's like what's happening right now on the ground? What are the interesting companies to look at, to pay attention to? Who are the interesting players? There's all sorts of different things to go into. An issue like on baseball cards might be pretty broad at this point. Honestly, we'd probably go a little deeper and more niche than that at this point. But I mean, it just depends on the issue. And then part three is usually kind of just piecing it all together, speculation about where it could go in the future, some companies to look at that we think are doing interesting things in the space, and just some general opining and closing thoughts. And we try to wrap it up at about 2,500 words per issue. And yeah, that's basically how it goes.
And so you're doing this on your own, and then you eventually connect with another Substack writer who was doing something similar to you. Who was that person, and what was the synergy there?
So after a little while, I had a pretty decent Substack following. I want to say maybe a couple thousand. I can't really remember. And I generated a lot of interest, and there was a lot of community involvement at the time. There was one person in the community. His name was Wyatt, and Wyatt had him and I always used to go back and forth on Twitter and kind of talk about some of these new markets and alternative investing. And the more I learned about him, the more I kind of liked him. I thought this guy's pretty interesting. He's sharp as a tack, and interestingly enough, in his background, so he comes from finance, and he developed a kind of like a methodology for evaluating appraising rare books just on his own. I thought that was really interesting. And so after a while, he basically started his own Substack about alternative investing. And so I had mine. It was kind of, I was doing my thing and he was doing his thing for a little while. And I just quickly realized, like, I don't really want to compete with this guy. And I happen to really like him on a personal level. So I basically just, rang him up one day and we had a chat, and we talked about maybe joining forces. And it was a little tricky because we're both Americans, but we both happen to live overseas. So I live in Australia and he lives in Spain. But we'd never met in person, but we decided, yeah, let's go for it. Let's build a company together and see what we can make happen.
And did you import his list onto your Substack, or did you import export your list and put it on his Substack? Like, what was the actual combination?
Mine was bigger, so we decided to go with alts, or at the time it was called alternative assets, Substack, and make that kind of the main one. And so we kind of folded his list into ours at the time. That was, I think we folded like 300 or 400 folks into a list of like 2 or 3 thousand. I mean, months and months and months later, we would fold, 7,000 subscribers from other newsletters that we would acquire um, into a list of about 10,000. So it definitely got more complex later on, but it was good to kind of understand early what folding a list into another list, the mechanics of that, because it's a tricky thing. There's no rule book for this stuff, right? It's and you got to be careful when you do this kind of stuff. But we learned a lot from starting small, and that's helped us tremendously as we've grown.
And when you guys teamed up, did you start producing more newsletters on the alternative assets Substack, or was it you just kept at the same pace and you would just trade off each week in terms of publishing or writing the newsletter?
When we first joined forces, I kept the Sunday issue going myself. I've never actually let that go. I've been doing that for, years now, and that's kind of like my baby. That's where the whole thing kind of started. So I'm really hesitant to let that go. But what we've done since then is we've added other newsletters. We've added specific vertical newsletters. One thing I should mention, one of the big things we do, and one of the reasons we got off of Substack pretty early, because we realized Substack didn't have what we wanted in this area, was preferences, right? And I think they've made some inroads into this kind of stuff since then, but they weren't enough for our needs. Because we're so broad and we cover so many different asset classes, we need to know what people are into. Otherwise, we put them at risk of, frankly, receiving too many emails, right? So part of our onboarding flow now, a huge part of our onboarding flow, is asking people what they're interested in. And, we have a huge selection of different asset classes. And so we gather that information, and then we're able to send, vertical specific newsletters to people who are just interested in real estate, just interested in farmland, just interested in music rights, et cetera. So that's helped us a lot. When we first started doing that, Wyatt was taking some of the asset classes that he knew best. So like the sports memorabilia and the collectibles, the rare books, some of the toys and games and that kind of stuff. And I was covering the asset classes I knew best, like the websites, the digital assets, the domains. And then NFTs fell in our lap all of a sudden. And then we realized, all right, we got to start hiring some outside talent. But yeah, that's another story.
And so you moved from Substack to ConvertKit, right?
Yeah, we moved from Substack to ConvertKit. And, I still think Substack is phenomenal in many ways. It just wasn't right for us. I'm forever grateful to Substack. That's where we got started. I think they've made some great moves lately. I know you've been covering them, and I agree. I think they're doing a lot of things very, very right. But ultimately, for us, it just wasn't powerful enough. We needed website integration. We needed our own control over paid plans and paid props and that sort of thing. And so, moving to ConvertKit was, a great move, frankly.
And I've got to imagine that given how deep your content was on these like single issue things like these assets, once it got just really well indexed in Google, I'm guessing SEO kicked in a huge way at some point.
And that's part of why we moved to ConvertKit also, is I didn't like the fact that Substack was kind of stealing a lot of the juice for this really valuable content that we were putting out there. SEO is definitely very important to us, and the only way to really control that is to have that on your own domain. And so, yeah, that was part of the decision as well. Yeah, especially when you're doing deep dives on topics that are easier to rank for than other broad topics. So yeah, it's very important to us.
Yeah, and have you tried to like create like indexes so that it like people can land on a page where, like you said, like the memorabilia or something like that, where it just kind of like they're landing on, they can click through and look through a lot of the different assets in the same category and stuff like that.
Yeah, like our entire site structure is built around categories, and people, they come to the site and the first thing they say is like, "Wow, you guys cover a lot of categories." And like that's like the idea, it's just we cover a lot of, alternative categories, a lot of non-mainstream thinking about investing. And I mean, we if you go to the site, you'll see we have all sorts of stuff on there, and some of it we only cover once or twice. I'm not going to pretend that, some of the stuff we cover is that important in the long run. We'll cover stuff like billboards. We've covered, water rights in the past, and but when you put it all together, yeah, it makes it real kind of compelling from a content standpoint, because I think that's a big part of why people subscribe to us and stay subscribed is they love the variety. They love hearing about something different every week, or a different alternative take on something mainstream. So yeah, early on we made a decision. Do we want to go tall or do we want to go wide? And Wyatt and I both agreed, like, let's go as broad as possible. I really think that's the way to go. And that's literally the opposite of what they tell you to do in business school. It's like, start with a vertical, and we did the exact opposite. And I wouldn't have done anything any different. I think it makes our newsletter quite unique.
So let's talk about the ways that you monetize. Let's first start with sponsorships and advertising. How do you approach that? Because you do some unique things when it comes to like sponsored content and stuff like that.
From the beginning, we had folks reaching out to us to sponsor the newsletter, and for a long time, it was purely solely inbound. That is, we've been doing accepting sponsorships for a long time. It's funny, even when we were on Substack, we were accepting sponsorships. I know Substack's whole thing is, we don't want ads and all that, and I don't know. I don't personally agree with that. I don't see any problem with relevant targeted ads. So even when we were on Substack, we were accepting ads. But yeah, I mean, we basically, it's pretty standard. We have, two ad slots per issue, one at the top, one in the middle. We do a lot of affiliates, affiliate linking and affiliate partnerships. The biggest thing that we do is what we call a deep dive, and probably not the most original term. I know there's a couple other folks out there doing the same thing, and I may or may not have stolen the name from a couple of folks, but it is what it is. I mean, this is a deep dive on a specific company, right? So instead of doing a deep dive on a specific niche or offering or a market like we do, this is a deep dive on a specific company, and we make it clear that these are paid. These are in each deep dive that we do. It's like, look, this is paid. The company paid us to write about them. That said, I think you'll find our analysis unbiased, informative, and fair. And we know it kind of straddles a line. I think the only way through that is just sheer transparency, and that's what we do. And I think people really appreciate that. So this has worked out really well for us. These analyses on companies. These are companies that maybe they're launching a new product, maybe they're looking to raise money themselves. I think it's a great kind of win-win for everyone.
So like give me an example. So is it a company that somehow is a marketplace for a like an alternative asset, or is it an alternative asset itself? Like how does it fit within what you're doing with the newsletter?
Yeah, it would be like a company that is, related to the investing space somehow, right? So, for example, we just recently did one with a company called Ember Fund. Ember Fund is a crypto fund that, we found pretty interesting. They have some interesting strategies, and there was no conflict of interest between Ember Fund and our own fund, which maybe we get into a little bit later. But they came to us saying, we'd love to get the word out, and we took a look and said, yeah, sure, we can do this, and so, I think it really just comes from a place of honesty with our audience. It's like, look, here's what we found about this company. Here's the good, here's the bad. To be clear, these are not puff pieces, right? Like this is not like, a 1,000-word blog post that, some outsourced writer spun up, and none of that. Like we write every single issue. We put a lot of thought, effort, work into the everything from the research to the editing. Our standards are very high, and, I think our audience appreciates that.
And you mentioned that like you also do like affiliate marketing. So is it like, if you're going to recommend, say, some SaaS software that'll help you with your keeping track of your investments or something like that, you're going and either grabbing an affiliate link or emailing them and saying, hey, can you give me an affiliate link where I can get credit if someone signs up for your platform? Or how are you approaching like the affiliate marketing part?
Pretty much like the latter, So I think that we try to find interesting companies and partner with them. Affiliate is the easiest, quickest way to partner with a company, So if we know we're going to be writing about a certain topic, a few weeks beforehand, we'll reach out to a couple companies that we find interesting in the space and be like, hey, we'd love to kick some traffic your way, kick some quality clicks your way. Do you have an affiliate program? And yeah, more often than not, they do. Sometimes they'll just create one for us if they're a small company. And again, it's like, we try to skirt line and kind of walk that tightrope in a really smart, intelligent way. Like we don't want to be seen as shilling or selling out or anything like that. It's more just like, look, we can drive traffic, we can drive clicks. Like as long as we're honest and transparent about what we're doing, I have no problem with that. So yeah, I mean, affiliate marketing is a pretty big part of what we do.
Another thing that you've done is you've launched a investing fund, and I'm seeing more and more creators doing this where they use their readership to recruit investors into a fund. And not only are they investing in companies or assets, but then they also get to collect fees and stuff like that. How did you go about launching the fund and recruiting members of your audience to basically invest in that fund?
The fund came out of from the audience request, basically. So even like right when Wyatt and I first met, we had folks that were asking us like, can I just, invest in the recommendations that you put out there, the cool assets that you find that you think are going to be big in 10 years? And we basically said yes, but not yet. We had to get a lot of ducks in a row, legally, to make that happen. And it isn't cheap to spin up a fund either, right? It takes a fair amount of funds. So we actually did some fundraising ourselves. So we've raised some capital ourselves. And a lot of the capital we raised actually came from the community itself. So you can see it's kind of like the circle of life situation here, right? It's basically it's a constant kind of back and forth between us and our community members, and raising for ourselves as a company and raising our alternative investment fund. So that fund is now live. It's been live for about 8 months. It's called the Alts One Fund, and it's a pretty modern, unique way to invest in esoteric, exotic alternative assets. We're out there buying stuff that other funds aren't touching with a 10-foot pole, and frankly, it would be a rounding error for them, right? So, I mean, the first thing we bought was a comic book, like a highly graded comic book, Daredevil #1, the first one ever printed. That was highly graded. We bought a copy of the White Album on vinyl that was owned by John Lennon. That we got that at auction. That was a big win. We've bought some British modern artwork. We're about to buy our first barrels of tequila straight from Mexico. We are what else? Oh, concert posters. That's a rare one that no one was talking about like 6 months ago, and now I feel like everyone's talking about it. And we bought the second most expensive concert poster ever at a public auction ever. That was only about a month and a half ago. So it's pretty cool. It's pretty exciting. It's a 10-year fund, so we're not looking for anything short, quick flips, anything like that. We're looking for stuff that's criminally undervalued in the long run, and that's our MO.
And it's not like something where anybody with a spare $100 can just invest in the fund and get a certificate or something like that. Like they have to be like it's only a small percentage of your audience that can even invest because they have to be accredited investors. And I don't know, the rules, but I'm guessing you have to have like I think like a half a million or $1 million in assets or something to even become accredited in the first place.
Depends on the country, but yes, you do need to be accredited no matter what country you're in. The laws vary from country to country, but it's something like that. That's a good benchmark, what you said, $1 million. And that's unfortunate. There are ways around that. They're even more time consuming and even more expensive. And we just wanted to start with, what we could reasonably achieve in a short amount of time. And so, yeah, so it's for accredited investors only, anywhere in the world, 20,000 US dollar minimum. So unfortunately, it's not for everyone, which is a little frustrating, but you got to start somewhere.
So you're writing the content for the newsletter, the regular editorial content. You're finding advertisers. For some of these advertisers, you're writing extremely long pieces of content. You're working with investors. Then you're also doing the due diligence and investing in all these alternative assets. How are you? You must be staffing up at this point, or else you're the most productive person I've ever met. How are you? How are you kind of staffing up?
Well, when we first started, it was during, I was living in Melbourne, Australia at the time, and Melbourne was famous or infamous, I suppose, for having a very strict lockdown.
Yeah, you
So
couldn't even leave your
nothing better
house.
to do on the, yeah, nothing better to do on the nights and weekends for about 4 straight months. So it's funny you mentioned because also the trickiest part was when we kind of kicked out of that and we got our freedom back. It was like, oh man, now I've got this newsletter I've got to stay committed to. That was a tough couple of months there, but yeah, since then, we've definitely staffed up. So we have a team of contracted writers, analysts, researchers that help us. And it's been hugely valuable. What we still do though is we still do the editing. and it's funny because like, that to me is the most important part of writing, truly. Especially when you think about all these AI, tools coming out, and like the editing is what matters, right? It's not the number of words or it's really like how you say what you're saying and how you say it in your own voice and how you make it exciting and keep it interesting. And it's a challenge because, like I mentioned, we have to keep our emails under a certain limit so they don't get clipped in Gmail. We have to make sure they're mobile friendly. You got to remember when you're scrolling on your phone, looking at, a newsletter on your phone, more than three sentences takes up an entire screen's worth of real estate, and this it's unfortunate, but it's changed the way we have to write in order to stay interesting. And so yeah, a big part of what we do is just plain editing to this day. And we have an editor as well. Actually, it's not like we don't have an editor. We have a full-time editor, but it takes a lot. It takes a lot to have a high bar, which we have.
So how much content are you producing on like a weekly basis now?
We're producing about 5 issues per week. However, not every user or a community member rather receives all 5. So a lot of it depends on your preferences, like I mentioned before. So, if you're into everything and you've set your preferences accordingly, like you'll get all 5, no question. But, if you're just interested in this vertical or that vertical or general news, like you might get 2, maybe 1 or 2. So it's all again, this is all just based on the preferences. We leave it open to the user to decide what they'd like to do, and just give them what they want.
And you said that you've also started to acquire other newsletters. Is that acquiring other newsletters in the alternative asset that are writing about these same things, or are you branching into other subjects? And are you subsuming those newsletters into, the main newsletter, or are they operated as like separate things?
Great
I
question.
know I threw a bunch of
So
questions at you.
yeah, it may be a long answer, but I'd love to talk about this. So first, I want to say that I think that newsletter acquisitions are probably the greatest hack that not enough people are talking about. It's funny because this happens all the time with media. M&A happens all the time on the high end, but there's nothing stopping you, as a solo or a small business, to do it on the low end as well. And as you may know, there's some newsletter marketplaces out there, and that's one way to source newsletters for sale. But to get the best deals, you kind of have to go outside the marketplace a little bit. You kind of have to just hustle and find the newsletters that are willing to sell. And so we've bought a couple, more than a couple actually. So we're coming up. We're about to close our 5th newsletter acquisition, hopefully next week. This one's looking very good. I can't announce it yet, unfortunately, but this will be our 5th one. So the 4 previous were increasingly bit larger and larger newsletters. The first one was a newsletter called FinTech Coffee, which was basically a RSS generated newsletter. It was didn't take much, to produce. Is basically just kind of a
Aggregator.
automatically generated newsletter aggregator. Yeah, and so it wasn't a big purchase. The next one we bought was a newsletter called Arc Watcher. This was a fascinating one because what this newsletter did is it basically tracked the movements of Arc Invest, right? So Kathy Wood's notorious funds. Lover or hater, people are interested in what Arc's buying and selling. And so this newsletter was generated purely by Python, and it basically tracked all of the movements, and put them into like a kind of like a really pretty kind of image, and then just basically generated this newsletter automatically every day. These are the kind of newsletters that we were looking to buy at first because it's like they take no additional, there's literally no additional cost. You're basically buying software, but you're also buying a list. Now with those newsletters, we kept those running as on their own, right? We didn't fold those into the larger kind of ecosystem at first. Over time though, and this is where it gets key and critical, but slowly but surely those folks start to become aware that they're part of something larger, and we delicately, with intention, do start to fold those into the larger list. The deal we're about to close is very vertical specific. I'm afraid I can't give too much detail, but this is a newsletter. It's about 12,000 subscribers, and I basically found these guys from hustling. I had noticed that their newsletter had stopped being active for a number of months, and I basically reached out to them and was like, I love your newsletter. I think the quality's awesome, but I noticed you hadn't updated it in a while. Let me know if you'd love to chat. We'd love to maybe make an offer on your newsletter. And one thing led to another, and we're in the final stages now. And so this is an alternative investment newsletter essentially. It's a pretty big one. It's for us at least, and so I think it's just a terrific growth hack. I think it's a terrific way to grow your audience, and especially if you're verticalized like we are, it's really perfect because we can grab newsletters from all these different verticals, and it all still kind of makes sense under our umbrella brand, so to speak.
When you're buying these newsletters, are you just buying basically the list and the website and any associated social media accounts, or are you also buying talent as well?
We don't buy talent. What we do is we borrow talent for the first month. So part of the contract is, the first month or two, we need to bring the owner on board as a advisor contractor. But the idea is not to buy talent. No, we're actually just not at that stage yet. We're not big enough for that kind of thing yet. We're not buying the kind of newsletters that would necessitate that. There is some key man risk when you're doing this stuff. When you're buying an automated Python newsletter, sure, it's just software. But when you're buying a newsletter with a personality and a voice, there is some key man risk. So part of what I look for is, can I kind of, co-opt that voice for a little while and then slowly blend that with something more, akin to our voice. And I think blend is the key word here. You can't do stuff quickly in this game. You gotta be careful. You can't just buy a list and then start emailing those folks from a totally different email address. Or I mean, that's one. First of all, it's illegal. Second of all, that's one-way ticket to spam city, right? Like you're not gonna last. So we absolutely buy the website or the email sending domain as well. We continue to send from that, basically in perpetuity. And then over time, we just slowly and carefully fold them into our larger kind of ecosystem.
So you're not trying to be like a Condé Nast that operates all these different brands and magazines. All your acquisitions are kind of pulling into the mothership where it's more like a category that people can click on the main
That's right.
website. And so it's all stemming from the core brand, but it seems like you're kind of just launching more verticals within that brand on slightly more niche things within investing.
So far, that's been our strategy. Although I must admit, in full confidence, um, we that may change. We're still learning on a lot of this stuff, but so to this point, that has been our strategy. Yeah, just kind of the mothership approach, right? Yeah.
And so, like, when you're assessing whether a newsletter is worth buying, it's based on topic and then quality of list, I'm guessing.
Topic, quality of writing more than anything else. I'm not interested in buying newsletters that they've just been dialing it in, because that's A, not what they're going to get from us, and B, my hunch is those people just aren't as valuable because they aren't as attached to, the quality, like the subscribers that we want to attract. So first and foremost, yeah, so it's topic and it's quality of the content itself. But beyond that, I look for engagement. That's my big thing. So, you know, I mean, for example, I've been negotiating with a newsletter that has 40,000 subscribers. It turns out that it's actually like really there's only 8,000 that are engaged in the past 2 months. And so we don't bother buying the other, 32,000. It's just not worth it. So we basically look at the 8,000 that are active. We look at the engagement within that. We kind of triangulate a price based on, the number that are super active and then somewhat active, and then just basically what we call alive. We kind of triangulate a price through those. But yeah, it basically just opens and clicks rates, and we have a whole formula, and we kind of go back to, and it basically works. If the audience is interested, I mean, generally speaking, expect to pay between $2 and $4 per subscriber. It varies like crazy, but that's generally what we've been able to achieve. Which, by the way, is pretty incredible if you think about it, right? Like that's not a lot of money. That's and especially if you have a machine, an engine that's already monetizing, you know, um, pretty well, like you can make that back in 7 or 8 months. And some of the newsletters we talk to and we negotiate with are basically selling because they never got their sales engine working, right? Whereas we already have a working sales engine, so we can just kind of plug that newsletter into our sales engine, and so it really is a win-win.
So now you have these newsletters, you have your website, which now is like really well optimized. When you're looking, 2, 3, 4 years down the road, what's the opportunity for expansion? Like, could you expand into new mediums like podcasts, video? Could you start hiring for talent, do you think? And like an actual, like, well-known investing personalities? What's kind of the strategy a couple years down the road?
I think that of all the things you mentioned, I think hiring for talent is, I think, the critical one. That playbook has definitely been done. This is basically how The Athletic, got really big, and this is how a lot of publications, if you study, back in the era when newsletters and modern media companies were stealing from the newspapers, right? They would hire that talent. That talent would bring their following with them, right? So you might hire someone that has 60, 70,000 Twitter followers, and all of a sudden those followers, they'll start bleeding into your list, pretty quickly. So that's not something we've done yet. That is not something we can probably afford to do at this point. But if you're talking about the future and where we're headed, like that is definitely, I think, of the ideas you mentioned, that's the one that's most interesting to me. Yeah.
Yeah, and I've talked to, especially on the podcast front, some companies that they started out with like a key piece of talent, like what's the guy Pompliano, the crypto guy.
Yeah. Joe. Yeah.
He got pulled into Blockworks, and now Blockworks is like has an entire constellation, and now they're hiring like actual journalists and stuff like that. I also interviewed a guy who runs a sports podcast network called Blue Wire, and his was just like figuring out talent that was under leveraged on the podcast side, who were maybe big on Twitter or blogs or something like that, and kind of pulling them in. So that's really interesting. Okay, Svan, those were all the questions I had for you. Where can people find you online?
Yeah, straight up, just head to alts.co, alts.co. And, if you like what we're up to, subscribe, and we'd love to have you on board. And we're also doing a lot of, cross promotions and sponsorships and co-registration kind of swaps and that kind of stuff. So if you want to do business, just give me a holler, Stefan at alts.co.
Awesome. Well, this is a lot of fun. Thanks for joining me.
Thank you for having me.